What is up, YouTube? It is Koinonia Trader here. It has been a while since I have posted. The reason why is because I've been focusing on my students, but now that I've wrapped up the bootcamp, I'm going to start posting again my trade recaps here for the public, and of course for my students as well, as they are, still learning, still growing in the community that I built. It's been going really well so far, especially in this market that has been nuts. We've had each other's backs through it all and supporting one another, so that's awesome. So for today, I took one trade, even though there were two setups that appeared that were, pretty A1 in my opinion. I came in with a bearish bias, mainly because for the 2 to 6 o'clock 4-hour candle, we had invalidated this 4-hour FEG here. So we tapped up into all-time high. So it looks like now, right, we have a market structure shift here on the 4-hour chart, which could give us a potential move lower. The biggest thing that I was watching was taking out that low as the draw on liquidity for today, as well as this level that I have marked out here, which was the bottom of the daily fair value gap. Okay, so I was expecting price to try to touch this down here, but unfortunately we didn't get that, but we still ended up getting some good continuation plays here. So 4-hour was bearish to me. The hourly, same thing. As you can see, we had this slow grind down. We have bearish structure overall. So as soon as the market opened up, we had an immediate flush lower, right? We took out this level of sell side, we took out this level of sell side, and then we kind of just stayed around in this area before starting to push back on up. So what I was expecting for today was a continuation of this momentum down. I didn't capitalize on this big move down here, and that's okay, because you could still find a good setup that'll give you a decent risk to reward to be able to make enough of what you need daily, because you have to try to chase consistency, not big profits, right? You want to be consistent with your trading to be able to make this enough every single day, and then as you continue to grow, you scale your account. So like I said, hourly was bearish. 15-minute, same exact thing. We had some bearish structure. We invalidated these two hourly fair value gaps, which I forgot to mention. And on this dump here, we created this bearish 15-minute fair value gap. So I was bearish the entire day until we invalidated this 15-minute fair value gap, because until then, I would, if we had invalidated this, then I would switch my bias to being long, because at this point, what was meant to act as resistance did not, and it now can act as support. But as you can see, right, we do have bullish structure here, but I was ending up capitalizing on every single retracement. I was able to catch them during the macros itself. So let's dive into the trades that we were looking for. So like I said, bearish pretty much all day. Here I was looking for a bearish setup to get a continuation down into that 23,100 level and that 23,017, but unfortunately, according to my trading model, there was no IFEG that was created inside of the macro and then could have been taken. I was looking to see if this was going to end up getting invalidated, becoming a bearish IFEG, and then I was going to enter in there with my stop above that swing high, which would have been a protected high, so especially because it had taken out this swing high from here, but unfortunately we didn't get that. Now coming into the 1050 macro, I tried to see if this 1-minute fair value gap that was created right here, if that was going to end up getting invalidated. As you can see, it held as support. It got invalidated outside of the macro. So if anything happens like this where it's outside of the macro, I do not take that setup. Now coming into the New York lunch macro here at 1150, as you can see, we end up getting a push higher, and then we get that invalidation of that 1-minute FEG right there. I entered in, put my stop above at this swing high right here. Even though we have relative equal highs, I did not mind taking that. I was looking to get at least a 1 to 2 on this one. I did take off the majority of my profits at a 1 to 1 somewhere here, and then I put my stops to break even because I didn't have much time to watch it. And so as you can see, price moves back up, stops out the rest at break even. But if you held the entire position, which I don't recommend you do, especially in this market, I usually tell my students to take off at a 1 to 1.5 and then try to target, your runners to a level of liquidity of some sort. So like down here, or at least the bodies of this right here. So overall, this trade did hit a 1 to 2.8 risk to reward, following the structure of the higher time frame. And then looking here in the New York PM session, again with a bearish bias, here is a bullish fair value gap that gets created. another bullish fair value gap, and another one right up here. We get invalidated of those bullish FEGs, and you can see it's at the very last minute of the macro. So that was the entry, stop above right there, target a 1 to 2, and that quickly dumped down to that 1 to 2 risk to reward, and then start to push on higher. As of late, the market hasn't really been moving much during the session. It's mostly at the very beginning or at the very end, so it's been a little tougher trading the model with the macros itself. But if you're targeting RR, then you tend to get hit with a very decent trade. Sometimes it'll come very close to a swing low, but as long as you take profits, you got to pay the trader. You can't just be hoping that you're gonna get all the way down here to a 1 to 2.6, right? Like if you're at a 1 to 2, there's no reason why this trade should ever go red. So these were the two trades that played out according to my model. I actually took this one. Some of my team actually took this, so that was also very good to see. But yeah, very simple, very straightforward day, just being patient, just like it has been needed for the last, I don't know, 2-3 weeks. It seems like not every single macro is giving a setup, but as long as you remain patient and wait for the order flow and the structure to align across the 4-hour, the 1-hour, and the 15-minute chart, then you are totally fine. So hopefully you guys ended up green today, and I will see you all tomorrow. Peace.